So I want to welcome Michael Reeder, and thank you for being willing to take some questions from me. Um,
Absolutely.
Michael Reeder is managing partner with the Reeder CPA Group, which has a niche in sort of working with the franchisors and the franchisees, and has worked with many of my clients as they were beginning to be franchisees in terms of evaluating and vetting opportunities, as well as helping them minimize their taxation once they were franchisees. So today I want to talk with Michael about some things that I think people who've never owned a business don't quite get. And we'll start with the biggie, which is the income comparison and benefits of being an owner of a business versus being a corporate employee, even one making a very, very high salary. So I know there's
Yeah.
2 or 3 components to this. I'm just going to let you take it how you like.
Yeah, absolutely. And it's great to be here, Jane. And it's nice to be with you all today. So let's use $250,000 as an example, right? So $250,000 on a W-2 salary as a corporate job. You're working the job, and every 2 weeks you get a paycheck, and you see the gross earnings of X minus federal taxes, Social Security, Medicare taxes, and depending on what state you're in, state taxes as well. And then there's the net check, right? So you're doing all the work and then you're getting paid last, and you can't write anything off. That, like as a corporate employee, government employee, you can't write anything off against that. And so, 250 gross. And again, depending on what state you're in, chances are you're netting somewhere in like the high ones on that, maybe like 175, 180 on that when you chop all the taxes off. And so, same example as a business owner, if you're self-employed, you have your own business, and you're paying yourself $250,000. Depending on how you're structured, let's just, we'll go into S-Corp, but if you pay yourself that 250, a combination of salary and profit distribution, then you're only paying the Social Security and Medicare taxes on a fraction of that total amount as opposed to all of it. And there is a wage base on the Social Security piece, on the Social Security piece, but there's still a massive tax savings there. And also you can write things off, right? So, business use of your vehicle, business use of your home office, and other deductions you can deduct in order to bring that taxable amount lower than 250. And then you also have the ability to pay your taxes into the government at your discretion. So if you want to pay in throughout the year, or if you want to pay, you want to pay last year's taxes come April 15th of the current year, you could think about it like in a very simple way. When you're a corporate or government employee, you do all the work and you get paid last. And when you're a business owner, you get to write off a bunch of things in arriving at taxable income on that same 250, and you can control the cash flow of when you pay your taxes. You can pay your taxes during the year or in the subsequent year, and you also can control the timing of expenses. You can accelerate expenses and you can defer revenue. So in the current period, that can reduce your taxes. And you also have the flexibility to make bigger retirement plan contributions. For example, you can make a profit sharing contribution for 2023. You have all the way until September 15th of 2024 to make it and have it still count as 2023. So without me rabbit holing on and on and on, that's a very high level example of how, if you're self-employed, essentially you can call it like 170 and still and pay the same amount of taxes like you have to make, as opposed to making 250 as a corporate employee.
Yeah, so I think what I hear you say is that as an owner, even if you have a owner benefit of 175, that is the equivalent of way more than that on the corporate side.
Exactly. You have to work, you have to earn that much more on the corporate W-2 side to have that same benefit of that 170.
Okay, great. And then let's dovetail in this. You touched on it briefly. Talk about the retirement account difference of what you can do as an owner in terms of how much you can defer versus as a corporate employee.
Yeah, so when you're a corporate employee, let's just talk about a 401k, or if you're in the government, a 403b or a TSP, a thrift savings plan, et cetera, et cetera. when you're an employee, you can, you could put away the salary deferral maximum, which it adjusts each year for inflation. In 2023, it was 22,500. So you can put away 22,500, and then you're kind of like, you're at the mercy of your employer in terms of like how much they would put away as the employer piece, like the employer match or the employer safe harbor or the employer profit sharing. But when you own your own business, you have, and again, it depends if you have employees or not, then, like in order for you to take a maximum amount for you as the owner, you might have to give a chunk to your employees. But I think that everyone would agree that they would rather, if given the choice, they would rather give more money to their employees than to the government. But with that being said, if you're, maybe you have a business where all of your labor are a bunch of 1099 contractors and you're the only employee, or the only employee is, you and your spouse or your kids, or maybe you just have a few employees, maybe you have a bunch of part-time employees and only a few of them are eligible. Whatever it is, there's a variety of examples. But you have the ability to have a self-employed retirement plan, whether it's a 401k or a 401k profit sharing, a defined benefit plan, which is essentially like a pension plan. And you can put away massive amounts into your retirement, into your self-employed retirement plan each year, over and above just the 22.5 salary deferral on the 401k. You can put away a much greater profit sharing. And then, depending on your cash flow, depending on your expenses, you can put away even more into a defined benefit plan. And then, you have the ability to maybe do some sort of self-directed vehicle as well. So you just have much more options in terms of, just being self-employed in general, you have that many more options in terms of like controlling the cash flow. And then part of that is controlling the type of retirement plan or plans that you have and what the maximum amount is that you can put in.
Great. Well, thank you. And we'll be back with more tips from Michael Reeder. Thanks for taking the call.